Google is very interesting. They issued that hundred year bond handful of days ago, and I was reading the last. I don't know if it was the last company, but in 2000, Motorola issued a 100-year bond. Um, and I just couldn't help myself. There's so many parallels between the internet bubble and the AI. I don't know if it's a bubble or not, and I don't care if it is or not. It doesn't
Mhm,
matter. It's just a label, kind of like a bull market or bear market. It's just a label.
mhm.
Um, but I find it very interesting that Google would issue a 100-year bond, and the last time that they did that, for if you're a history buff or if you've been around as long as I have, and even Justin, Motorola they were the cat's pajamas in 2000, right? They were
Oh
one of the
yeah,
great stocks, great companies.
along with those other stocks we don't talk about anymore, like
Correct. It
Nokia and
kind of
Ericsson
lost their
and
way, and so
Research in Motion. the,
I
the
just
the
found
the
that
graveyard
parallel
is
very
full of them, right?
interesting. Yeah. And I don't want to go on and say Google's the next Motorola because it sounds crazy at this point but it- the world changes, stocks change, companies change. I cannot believe, like, Thomson Reuters, is it
Oh yeah,
TRI or
TRI, right?
yeah, I mean, you could just be moving swimmingly along. You've owned Thomson Reuters since, 2010, and you're just, everything is all fine and dandy. And then one day or 1 month or 1 week or something, the game is over. It's changed. Something changed there,
Mhm.
and that stock has changed. And it seems like it's changed, obviously, for the worse. Like, you've given back, 10 years of gains in 5 months. And so I think things change is that's how you make money, is change. You don't want to be afraid of change. That's how you make money. That's how you buy a stock at 40 that goes to 120, or that's how you buy Bloom Energy at 30 and it goes to 140, because change. For the
Yeah.
longest time, I remember when Bloom Energy went public, I was all fired up about it. I thought it was the greatest story ever. The guy but it just was a dud. It did
Mhm.
nothing. It went between 20 and 5 over and over and over, and would have just driven you crazy. But guess what? Something changed around 30, and that allowed the stock to really, really run. So you don't want to be afraid of the change. You just have to be kind of aware and on guard and looking for that type of change.
No, absolutely. So speaking of which, there's always kind of this thought of, when you're getting rotation, how, certain things are like due. And for the longest time, you've kind of joked about this on IBD Live, over the last few years, like international. There's been so many times where it's like, well, gosh, international, it's due. It's gotta eventually have its time in the sun again. And it seems like that's finally happening, maybe. A lot of outperformance versus the S&P 500 recently. Now, again, you can see this long downtrend of that relative strength line, but a nice little turn up lately.
There's been a lot of chances for this to go up and work, but it
Hmm.
seems to be working and holding, what, inches off of 52-week highs. And it's up, 10% in 31 days out of this pivot, which might not seem that exciting, but that's coming out of an ETF. You can
Right.
position size a little stronger in an ETF than you would a normal stock, I think, from a risk management perspective. So
Hmm.
it's held up pretty well. It's the EWZ has done pretty good, and
And
um,
EWZ is Brazil.
Brazil, and
Hmm.
in some esoteric markets like Peru and Chile is,
Oh, yeah.
I
Peru
don't know.
was just phenomenal
Yeah,
lately, it
they've
seems like.
gone really well. So
Hmm.
maybe there's something to be said for that in the world. The nice thing is if the U.S. goes into a bear market, there are so many options, even as a U.S. investor, with these ETFs and a lot of brokerage platforms. You can buy Japanese stocks if you want. Japan's done very well recently. So, maybe Jim Cramer is right. There's a bull market somewhere, whereas the old days, when I say old day, I mean like 20 years ago or something, 25 years ago, you know,
Is that the old days now?
it is now, unfortunately. But if the U.S. went into a bear market, it would seem unlikely that, you know, the rest of the world would do great.
Yeah.
And that's a probably the case a little bit. Like if the U.S. went into a really bad market, it's unlikely this would um, hold up, but maybe relative it would do better. Now, I don't eat relative returns. Relative returns don't put food on the table, right? I'm in the
Yeah.
absolute business,
Mm-hmm.
absolute returns. Um,
And
so
don't get me wrong, relative returns are great when you're a mutual fund, right? And
for
all you have to do
sure,
is beat your benchmark, and
yeah,
you get your bonus. And it doesn't matter if you're down 10% as long as the S&P 500 was down 11%.
yeah,
You're golden.
you've
So
done really well. But if you're,
yeah,
I try. I don't want to go down. I mean, look, you're always going to be in a drawdown. It's kind of hard not to be, but
right.
I don't want to go down. I don't want to go down 25% and Nasdaq go down 30 and pat myself on the back. I'm not going to
Hmm.
do that.
Hmm.
I did something wrong if that were to happen. I
Hmm.
should now if I go down 8% and the Nasdaq went down 25, then I can live with that. So
Hmm.
it's all in that kind of vein. But yeah, they're holding up really well, and we'll have to wait and see. It's the dynamics of the overall market are very. There's so many cross currents, and the world is so small now that every
Yeah.
little thing, everything. When I first
Hmm.
started, I couldn't tell you what was going on with the Japanese yen or there's 12 aircraft carriers in the Gulf of off the coast of Saudi Arabia. I didn't know any of that. I didn't
You,
know any of
you
that.
weren't paying attention to the yen carry trade?
No, I didn't know any of that. And
Right.
I sometimes wonder if I could just I would like to go back to that because
Ignorance is bliss.
yeah, it doesn't do me any good. So, it's like again, back to the reminiscences of a stock operator story. The man, or this might be from Jesse Livermore's book. I can't remember. I get them confused sometimes. But the man, he call him the man in the mountains. He was a guy in California that lived in the mountains, and he'd come down to the brokerage firm, every other quarter or
Hmm.
every 6 or 9 months and buy stocks, and then he'd go back to the mountains, and how great he did because he was able to ignore the noise. So
I think that was Nicholas Darvis,
no,
maybe.
it's definitely
No?
in
Okay.
in one of Jesse's books.
Okay.
The
Okay.
man, I call him the man from the mountains. I just read it. That's the only
Yeah.
reason I have as much
And
confidence
maybe
as I
I'm
do.
thinking Darvis because again, like, he was
He
making
was
his
very
trades
much like that.
3 days late, or whatever,
Exactly.
off of Telegram, basically
Yeah.
getting prices off Telegram while he was, traveling the world and everything. But
Correct. I sometimes wonder the access to all this information. I'm not sure it's made us better investors. It's very difficult. Sometimes you feel glad that you're able to react so quick, but sometimes I think it hurts you.